Joining me now with some insight is PIMCO's Tony Crescenzi. He's Executive Vice President, Strategist for the world's largest bond fund. Tony's at PIMCO's offices in Newport Beach, California. Tony, you were down here with me just a few days ago. How has the picture changed this morning?
Well, aside from the big differences in weather between New York and California, well, these data are suggestive of the very big structural problems that the United States faces on many fronts, not the least of which is its savings problem, the net national savings problem. But when we think about specific industries that have turned down since the recession, we can see how difficult it is to get the jobs back that were lost, the roughly 8 million or so. Think of up to 5 industries: construction, finance, commercial real estate. These are 3 of the top industries that have lost jobs, and also the automobile industry I've left out. These jobs won't easily come back. In the financial industry, for example, the job loss in this current month was the most in about a year or so. It's lost 700,000 since the recession began, 700,000 jobs, because the levels of activity are well below where they used to be. The automobile sector lost 500,000 jobs because car sales have gone from 16 or so million down to about 12 or 13 million or so. And finally, the big job loss, of course, has occurred in the construction sector, which lost 2 million jobs as housing starts fell from 2 million down to 500,000. So the key story here, as we've repeated many times, that the levels of activity in these industries are well below where they used to be. And so you can't fathom how those jobs could be recouped so long as those levels of activity are well below where they used to be. So these are structural problems that can't be solved easily by monetary policy and other attempts to fix the economy.
Go back to Tony, talking about industries and businesses that are closing off workers right now, that major program being one of them for the United States. But Tony, when you look at what's happening in the markets, we're seeing a lot of selling in equities, but there still is that perceived flight to safety with treasuries. We're ending the week with a rally there.
But it's quite apropos, you could say, the space shuttle lifting off. What the economy hasn't achieved is what the space shuttle will shortly achieve when it's up there, which is escape velocity. Escape velocity would be defined as a self-reinforcing virtuous cycle of increases in production, income, and spending. And what's missing in this equation is more rapid income growth that will get the economy to keep moving. We need better or higher levels of aggregate demand, but we can't get them without the high levels of income. So we need full escape velocity and these things. The markets, of course, in recent weeks have been more optimistic. The NASDAQ hit a 10-year high, the transportation index a post-crisis high, and the Dow, of course, having rallied near 800 points. This momentum won't easily be broken by a single statistic, even though it's a major and the most important statistics, because the preponderance of other news, chain store sales, jobless claims, the ISM index, has been a little better. So the markets might give it a little more time, just as the Fed will. They're in a period of watchful waiting, you could say. And they'll wait through July's data, August, perhaps even as far as September, before going further. So the significant move in markets may not occur until there's a little more time having passed and seeing the high-frequency news in another month's payroll news.
Yeah, and Tony, you say the government needs to get out of the way, yet we're having calls for the government to do something with stimulus.
Yeah, uncertainty, of course, is a risk that can't be measured, and uncertainty is what government is bringing to America these days. It was good to see President Obama a little while ago not point fingers, as he did in his press conference recently, at the other side of the aisle, seeming to sound more cooperative and understanding, and even saying specifically that uncertainty over the debt is causing businesses to disengage and not hire. So that's a good sign, perhaps, in terms of policy making. So we'll watch the developments over the weekend, specifically on Sunday, on the debt talks, to see if they can clear up this very big matter, uncertain matter to businesses and households.
PIMCO's Tony Crescenzi, thanks for joining us.